Hello traders, this is Voulgaridis from ForexAnalytix. In today's week's preview, I'm going to be filling in for Blake Morrow, along with our associate Grega Horvat. So, let me start by stating the obvious. If you haven't tried ForexAnalytix, you should do so. For just $1, you can get 10 days of full access to all our services, chat room analysis, webinars, etc., which is going to give you a good idea of what we can offer for you and how we can enhance your trading. Having said that, let's move on to what's coming for the week ahead. The most obvious, the most important is the ECB decision on Thursday. Most likely, the market ahead of Thursday's event is going to be focused solely on that, knowing how the euro can move. I mean, it's one of the most major components, 58% weight on the DXY. Everybody's going to be focused on Draghi. Draghi's tenure is almost all over, as we know. Let's see what he can produce before he walks away. The market is expecting definitely some dovish. I'm not going to say dovish turn because the ECB has stayed dovish. Draghi, in fact, has never hiked and is not expected to ever hike in the years he has been ECB president. But most likely, the ECB is not going to want to stay behind the Fed, which is obviously heading into a rate cut cycle starting July 31st, but that's a topic for the next week's preview. Blake is going to do that since it's the week after. Now, there is obviously two different ways that you can look from a technical perspective the euro here. One of them is bullish, the other one is bearish. Now, how is that helpful to you? It is, as long as you know the levels that are important to the market. So, the thesis for those that want to be bullish is that the Euro USD was consolidating in a descending wedge. It broke above it, and it still remains above it. Now, the thesis for the bears is that we had a reaction higher from this wedge, which is clearly corrective in nature. You can see it here. It unfolded in a perfect channel. We've now broken below it, and we seem to be consolidating before we move lower. Do I believe that this is going to be resolved in advance of the ECB meeting on Thursday? I highly doubt it. Very highly doubt it. It is a very decent chance that we're going to remain in a choppy consolidation until we get the meeting and we see what Draghi brings on the table. Now, obviously, if there is some dovish surprise, we're going to see the euro weakening, and that obviously means that the dollar is going to be strengthening. Let me find the DXY on our platform, and you're going to see exactly what I'm looking at here, and you can clearly see that the DXY, despite the huge 180 degrees turn that the Fed made in December, despite the market pricing in now more than 25 base points of a cut, and that is obviously extremely different than what the market was pricing in just like 7 months ago. The DXY has managed to hold very nicely near the highs. I mean, just look at this chart. This chart clearly shows that the DXY has almost done nothing since the end of last summer. We are still consolidating near the highs. That obviously means that if Draghi pushes the euro lower, that is definitely going to produce a bullish break higher for the DXY. Now, does that mean that this is going to be something that's going to have follow through? Not necessarily, because once the ECB is over and the initial reaction is over, it is extremely likely that the market is going to start focusing again on what's going to happen with the Fed. How dovish is the Fed going to be? How much is the Fed going to cut? How much is the Fed going to lead ahead the market about what's going to happen for the rest of the year. Are we going to get 3 rate cuts? Are we going to get 2 rate cuts? Are we going to get 4 rate cuts? There's been times that the market has been pricing any of those scenarios. Okay, so it is more than clear that the ECB is going to be the main event, and what the euro does is also going to affect, at least temporarily, the dollar. Now, if you're asking me, what is most important than anything is what's going to happen at the 31st of the month, and that's what the whole market is going to be expecting. But as I said, this is a topic of a conversation for next week's preview video. Now, I'm just going to briefly go over a few charts that I think are at major junctures before I let you in the capable hands of Grega. Grega is going to go over some of the major markets. I just want to show you some charts that I believe are important for the market for the week ahead. Okay, now one of them is the USD CAD, and you will see here why. The USD CAD has been testing the confluence of supports, of key supports. One of them is an ascending channel. You can see it here in blue. That dates back 2 years. The other one is the horizontal support area at 130, which is also a very major psychological level. While we can clearly see that so far the latest price action can be technically interpreted by this descending wedge, notice the RSI divergence also. That means the following. If we see US dollar overperformance, one of the places I would be looking for that to play out is likely the USD CAD. As long as the USD CAD trades above the 130 confluence of resistances, I think from a risk-reward perspective, it is one of the most appealing charts out there having to do with the US dollar. Now, another interesting pair, which also has the huge benefit that is unrelated to the dollar, which means that it shouldn't be affected by any volatility that we're going to see this week having to do with the dollar. Or oppositely, you can look at it like that. It has a decent chance of moving while the dollar might be consolidating until Thursday, is the euro pound. We've talked about the euro pound. If I'm not mistaken, here it is. Andre also has a nice pattern in play in the euro pound that is already in the money. You can see here why I consider this an important chart. Because let me go first to the weekly. First of all, this is the weekly picture of the euro pound. As you see, the euro pound had been appreciating like for 11 months in a row, but it failed to close above this descending channel. Just look at the candle, the weekly candle that it left behind. Okay, it's a gravestone doji. Now, add to that if we go on the daily chart, you can see that the last part of the move higher can clearly be interpreted as an ascending wedge. The pair is currently testing a horizontal support area at 0.8960. I think that if we break below it, we should at least see a very decent continuation lower. Now, I wouldn't be having very high expectations. Initially, I'm viewing this as likely as a corrective move, but I think that 88.50, which is 110 pips lower, is a very, very easy target. And likely below that, I would be looking for this horizontal support resistance area, which is a little bit above 87 cents. Now, another pair I would want us to focus on, and then I'm going to switch to silver. I know that a lot of eyes are focused on silver, is the euro yen. You can see here why we've recently had a consolidation in the euro yen. It looks like a triangle to me. As you see, the RSI has already made a move broken below this ascending trend line support, and it looks very likely that the price is going to follow through with a move lower. The target in that case would be this spike low at 118.82. So I think that's a viable target, and I think that this is a technical event that is under development, but it's still quite early. I mean, we just broke out on Thursday and we haven't moved much since. Now, I know that a lot of people are focusing on what the metals are doing. We've warned in advance. We've even written a blog post at the 24th of June. Gold breaks higher after 6 years of consolidation. Just notice the date, right? 24th of June. That's a month ago, in which we were stressing out how important, how critical to the market dynamics has been this breakout in gold. So I'm not going to focus so much on gold, which you can briefly see here. It was in a triangle, it broke above it. I don't like the fact that it got rejected from the 127% extension, but keep in mind that it's currently backtesting this horizontal support resistance area at 1425, which means that I wouldn't put so much importance in that reversal yet. But one thing is for sure, silver finally, after a long period of time that was underperforming gold, is finally overperforming gold, and it's doing so in a very clear way. Now, silver did find resistance on Friday at a descending trend line resistance. You can see it here on the weekly chart as well. But keep in mind that this move has already been, a big one, an important one. And if we do break above this descending trend line resistance, higher targets would even imply a move all the way to 17.5, right? Which is a very, very decent upside move from here. Now, can we see a pullback prior to that? Yes, we can absolutely see a pullback prior to that, but as long as we stay above 15.5, I think that dips should be bought in silver, and the same should be happening with gold, although after the huge reversal that we've seen in the gold-silver ratio, those of you that are daily or frequently how listeners to Face, you know that we have, both Dale and I have been focusing a lot on the gold-silver ratio, and you know that we were looking for a reversal because silver had reached levels that we had only seen once in the past, having to do with its price against gold. It had actually surpassed 93, meaning that you needed more than 93 ounces of silver to buy 1 ounce of gold, which was definitely an extreme. And some mean reversion would imply some overperformance from silver. But I also want to focus on one thing. Usually, overperformance of silver over gold is in general a bullish sign for both the metals. And considering the path of monetary policy that we're seeing unfolding from central banks all over the world, it would definitely be not surprising to see metals overperforming and real assets in general. I think we are at the last part of this monetary experiment endgame. I think it's not going to end well, but I also think that is going to produce trading opportunities on the way. Now, I'm not implying that somebody should trade on a macro thesis. We are firm believers that you should always take everything into account, and technicals should be the focus having to do with pulling the trigger. But definitely it is, a huge positive trading in the direction of, the fundamentals. Okay. Now, I want to thank everybody. I don't want to take more time going through other markets because, as I said, there is the bonus of getting some analysis from Grega. I want to thank you all for being here. Stick around, listen to what Grega has to say and what he has to show. And we'll see you on Face tomorrow.
Hello traders, hello everyone, welcome to a new video for a lot of FX pairs, and also I will take a look on crude oil, S&P 500, DAX, 10-year US notes, and also Bitcoin, of course everything from an Elliott wave perspective. So I will begin with the euro dollar. Now euro dollar has been in a very ugly price action over the last what, year, or if not even more. So it's very hard pair to trade at the moment. But what is really important whenever you have very unclear price action or price structure on a lower time frame chart, focus on a higher time frame charts, or vice versa. If you have on a higher time frame charts very ugly price action, go to the smaller time frame charts. Okay, so with that being said, I still think that we should stay focused on this monthly chart, where I see still ongoing decline into wave C of B. So I'm looking and expecting a drop below 2016 lows. But before we go to those levels, I think that there will be some higher degree correction. Why? Because this recent decline, okay, despite lower prices, lower price action, we had a contracting movement. You can see this can be counted as a wave 1, 2, 3, 4, 5 with overlapping price move between waves 4 and waves 1, which means that this can be an ending diagonal. We have recently moved higher out of this ending diagonal, but then now falling back to the downside, testing this same trend line. However, I think I don't see any aggressive bullish price action. Okay, but what I see is probably a consolidation that will resume even further in time within this wave B, which can be even complex correction. It can be flat, it can be triangle, it can be very complex pattern. Okay, maybe not so clear. So in my opinion, I still think that euro dollar may not be the best pair to trade in the next few weeks, maybe even months. But this may actually change at the end of this year, when I think that again euro dollar weakness may resume. Okay, because that's actually where, in which direction we want to trade, because after all we have 5 waves drop here from 2018 highs. Okay, so euro dollar can be in a wave B. I think that we may see higher price action, but before we go to that, I still think that more weakness can be seen, because I can count 5 waves of decline here from June highs, and now we are moving sideways. So ideally this is a triangle for wave B of B, expecting a drop, and then maybe some supports could be established here at these May levels. Okay, now if we take a look on cable, I think this one is also bearish, but it was able to find some support here at this 1.24 level. So I have been looking and I have been warning for a drop towards this level, because we were trading so close to it that it was acting like a magnet. And it was a very important level as well, because it was the low of the year. So I thought, and I'm still very confident about this, that these are very important levels, highs of the year and lows of the year, where are very important stops or any other maybe entry orders. So it's not a surprise if you see these important levels to be taken out before market reverses, because new orders are activated, and that's why flows will change, and normally the price action will also change its direction. But I'm not bullish on cable, don't get me wrong. I just think that we are headed higher for a free wave recovery before this downtrend resumes. Notice that we can actually count 5 waves down in play here from 2019 highs. This can be wave 1, wave 2, another wave 1, wave 2, sharp drop for a wave 3, wave 4, wave 5 that will play the higher degree wave 3. Okay, so that's the cycle, the red cycle. Now we are in a wave 4, and then I will be looking for even more weakness. What is important at the moment is that from that high to that low, we can count 5 waves down. Okay, so it means that market completed this recent weakness. In fact, you can see that prices rallied quite aggressively. Okay, very deeply back into this wave 4 area, which suggests that wave 5 is probably completed. And because this rise was quite strong, I'm thinking about more upside, especially after wave B pullback. Okay, so cable may either stay sideways or even bullish for the next few days. Also, I think it's very interesting to track and very important to look at the euro pound. Now, euro pound has moved up into this very important trendline resistance where market failed. Actually, bulls weren't able to take this trend line out. So in my opinion, this ongoing consolidation from 2015 will continue, and actually this can be wave E now that I'm expecting. Also notice nice divergence here at the highs. Okay, so maybe wave C completed wave D. It can be very extended wave C leveled here. So I'm expecting maybe a reversal lower for a wave E. What I really like is on the 4-hour chart this price action. Notice that we had higher highs, okay, and higher swing lows. But in this recent push higher, which was actually very strong to be honest, market failed to stay strong. In fact, this recent push higher, which was the strongest in the last few weeks, it was completely reversed. So when you have a very strong leg moving into a new high and this leg, those bulls that are completely reversed, then this should be very important evidence that something is changing, because even very strong bullish price action um, wasn't able to stay there for a long time. It was just a temporary move higher into this resistance, and then market, as you can see, is turning to the downside. And from an Elliott wave perspective, this could be a very nice ending diagonal. Also with a throw over formation, we have moved above this trend line resistance and then fell back below it and even broke through this lower trend line recently. Okay, so in my opinion, I think that euro pound will be headed even lower, especially if you will check your lower time frame charts, and you will see that you can count 5 waves down here. Now let's, which means also that either maybe cable after all itself is headed to the upside, and maybe this euro dollar will stay bearish or even sideways. But I think that euro pound and pound dollar, if in combination, suggest that pound could be ready for some recovery. Now let's take a look on Aussie. Now on Aussie monthly charts, clearly we are in a bearish trend, but there are always pullbacks, and it appears that this pullback is now in progress. It's still not finished if we consider the price structure from the start of the year, where when actually market spiked down here. So what I'm expecting is actually a third leg of recovery, because corrections are always structured minimum by 3 waves. This was the first leg labeled as a wave A. Then you have an overlapping decline in 7 swings. And what is important is this broken trend line, which actually became a resistance recently here at 69.10 level. So I'm thinking about more upside here, ideally in a wave 3, and then wave 4, and even wave 5, maybe even back into this area. Okay. Also on the 4-hour chart, if that's the case, you should pay attention to this support here. Let me check the prices here at around 0.70 psychological level. Actually, that's a very important level as well. But of course, as long as we are trading above this invalidation level, I think that this uptrend remains in progress. Also, what is important regarding Aussie is that we keep an eye on gold. Okay, gold has recently broke to the upside. Okay, and it seems that we are here in a wave C. We have seen some new highs here last week, but because this was just a temporary move to a new high, I assume that this is actually part of a complex correction of this wave 4. So it's ongoing consolidation. Okay, I see this was wave 1, wave 2, strong break into wave 3, wave 4 is now in progress, and then you expect higher prices for a wave 5. Okay, so on the 4-hour chart, I'm looking at a flat. Okay, that would be ideal scenario, and these two supports should be very important in this structure. Okay, so I still think that gold is not over yet on the upside. We should see higher prices, but once we're really starting to break higher into wave 5, maybe that's the time when Aussie dollar could also move to the upside. But that's only for the midterm view. Okay, on the longer term view, we still should consider that gold is actually not so bullish like many of you think, especially those who are not looking at the markets from an Elliott wave perspective. Notice that here we had 5 waves of decline, okay, and now we are recovering in 3 waves, which is a very normal cycle, okay. And I see 8 waves. This is an 8-wave cycle, 5 waves down, 3 waves of a pullback, okay. So in my opinion, these are just 2 steps back before market is headed into real direction, which is to the downside. But on the shorter term charts, I don't see, as said, I don't see this wave C completed yet. That will also accomplish this higher degree wave B. So we should pay attention to those maybe 50% area, and then maybe even 61.8% from where market could maybe turn to the downside. But the most important thing is that for now we still have only 3 waves of decline from those lows, and that this can be seen as a counter trend movement, okay. Now let's take a look also on dollar CAD. Now on dollar CAD weekly chart, this is definitely a bullish trend. What is important is that we are holding above this trend line support that is now actually coming in play here at these prices or a little bit lower. So for now I'm still bullish on dollar CAD, and I'm expecting more upside because this pullback was in 3 waves. From what this was from 2016 16 highs down to 2017 lows. So I'm expecting more upside, but looks like this is just consolidation before we are headed even higher. Now here's the closer look. It's a daily time frame. This was the first leg, wave A, wave B, okay, and this was wave C drop. So wave C, you should watch for this zone to be a potential support for a bounce. Also, this will be a 50 or 61.8% retracement compared to this wave 1, and also notice that here we have this former wave 4. So I think that more upside could actually be coming in play from lower prices. Why from lower prices? Well, because on a 4-hour we have ongoing decline still. Notice that this is actually consolidation now for the last few days. Okay, so I see this as a wave 4 triangle that will send prices lower into wave 5, and then we should be aware and be ready for a potential bounce. So for now, dollar CAD could see another drop from here. Now let's take a look also on dollar index. Now dollar index of course is inverted to euro dollar, so if I'm expecting euro dollar to be still staying in complex correction and maybe now headed lower for a wave B, then this one is now headed higher for a wave B. Okay, what is important in the shorter term charts is that actually this recent decline was in 3 waves, okay, and we have bounced from very important trendline support. It's actually lower side of a corrective channel. This looks very strong move, so I'm thinking that we are already headed higher for a wave C. Now in such case, the 61.8% should be the first level to watch. Okay, this should be the minimum level that I would look for, but there's definitely a chance that we hit 98. So as long as that's the case, that's when maybe dollar Swiss could play, could be actually very interesting, because that's probably the only pair that I see it very clear on the at this stage. Okay, when it comes to dollar bullish view. Okay, why? Because from those lows in June we have seen a very nice and aggressive rise. Okay, either that's a wave A or maybe even wave 1, who knows. But if that's the case, then we are now in a wave B or we are in a wave 2, which means in both cases we should see another leg, another push to the upside. If we look on the 4-hour chart, what I see is a 5-wave rise and already overlapping decline. Okay, so I see this as a potential corrective movement that will take us higher. 61.8% is also very important. And notice what we have here back from start of July. We have a gap, and when this gap is filled, that's when things could become very interesting. Gaps are firstly like magnets, but once they are filled, new flows will occur because there are unfilled orders in this area. Okay, and once those orders will be executed, the market would actually turn. So I will be watching this price action very closely. If we fill this area and starting to rally, in impulsive fashion, then I will definitely consider to jump into this train. Okay, but of course the important will be what will happen at this gap. If I'm on the right side, then I have to see a bounce from this gap. So if we'll just move through it and continue to the downside, then I will know that I'm wrong. Okay, so for me the important is that I will wait on this bounce first before making any action here. Now let's take a look also on Euro Aussie. Now I have been short Euro Aussie. I'm still actually short uh, because recently we spotted a very nice pullback to jump on this on the short side of this pair. Why I was looking for more weakness is very simple. This was a very strong drop here from end of 2018, and then we just moved higher, but notice that we moved in three waves. Okay, now this three wave move was marked as a flat correction. So my primary view was bearish because this drop was very strong. Okay, and this move to a new low here back in April was just a temporary spike to a new low, and normally that occurs in a flat corrections. So that's why I have been looking for this irregular correction, and notice that 78.6 and 61.8% is where the market stopped and actually started to roll over. And as soon as we have spotted this very nice move to the downside, of course I was interested to join this trend on a pullback. So on hourly chart, or on a 4-hour chart if you want, or on a smaller degree time frame chart, we recognize this very strong drop as a wave 3. So I jumped into this weakness after this wave 4 pullback in this area, okay, at the area of a former wave 4, because that's where actually trend may resume its primary direction, which clearly in my case is to the downside. So what we see now is a very nice and strong drop, which can be counted already in 5 waves. We have moved into some nice interesting fib zone here. Of course there is always chance for more weakness, but any bounce in 3 waves should not be a surprise. So stops are already tighter, and we'll see what market will actually do. Okay, however, as I said, the important is that market sooner or later will probably move into a correction in 3 waves before we resume in even lower. Now let's take a look also on crude oil. Now crude oil, as you know, a lot of different things are going on globally. So crude oil is actually both-sided. It's not a very clear direction, at least not on the shorter term charts, because we have seen some nice aggressive moves in both directions. And what is going on, I assume it's a triangle. Okay, it's a triangle in progress. So this very strong fall last year could be a first leg that will still cause more weakness, but before this really comes into play, we have to see a completed pattern that is in the middle of these 3 legs. Okay, so and this pattern can be a triangle placed in this wave B. So I'm looking for a wave A, B, C, D, and expecting wave E. Then I will look for drop. So maybe at the end of this year, this is when, based on timing, this may happen. So on the shorter term charts, what is going on at the moment is that I'm expecting a 3-wave drop for wave D, because in the triangles each leg is made by 3 waves. Okay, so this was very nice impulse down, wave 1, 2, 3, 4, 5, and now watch out for a rally back probably to 58, and then maybe a new drop. Okay, but keep in mind that this is a sideways price action. Notice that here we have seen a recovery, a drop, a recovery, a drop. So clearly there is no clear trend. That's why I'm looking for complex correction, like I said, a triangle. Okay, now let's take a look also on the S&P 500 and DAX very quickly. Now on the S&P 500, still we are in uptrend, and this uptrend may resume even towards the second target. Okay, I definitely do not see any evidence of a top yet, but of course there will be pullbacks, but I assume that this may be of a higher degree pullback will occur from a new high. there's a very nice support that comes in at 2960. You can see these old highs. Also, this was a resistance, this was a new support, so maybe another support will be found here. What is important is also the structure on the lower time frame charts. I see potentially ongoing 5-wave movement in progress. This was an extended wave 1. Okay, then we have seen a 5 waves within a wave 3 and now a pullback. So this pullback, if we are in a higher degree wave 4, could stop at the previous wave 4, and this comes in at 2960. This is also where I see 38.2% compared to wave 3, very important level. And then you have even at 2940 this gap. Okay, again, as I said earlier, gaps can be very important, so maybe this is going to be filled and then we see a recovery. Okay, so watch out possibly for only 3 waves or for pullback before market resumes to the upside. Definitely you will have better chance to be right if we'll just continue and expect more upside with an uptrend rather than trying to call a top here. Now let's take a look also on DAX. Now DAX is not very clear on the shorter term charts, but what is important is that we can count 5 waves up here from these lows, so maybe a hard degree pullback is already here and we are going to see this support retest before uptrend resumes, or this is just a pullback within ongoing wave 5 and we'll see a move into these fibs. Okay, however, we have to be very patient. From a trading perspective, there's definitely not a very good area to be involved if we are in a wave 5, because there is not enough of room for a very good risk reward setup. So in my opinion, I think it's better to wait some deeper pullback. On a monthly chart, clearly I think that we are headed to new highs, because this was wave 1, wave 2 extended, wave 3, wave 4 that found a support at this trend line, which is the parallel trend line within this base channel. Okay, so I connected the start of this trend from start of a wave 1, end of a wave 2, and put the parallel trend line at the top of wave 1 right there. Okay, and this is where market recently found the support, even in this wave 4 and now again in a wave 4. So I'm thinking that this correction after all is completed, and when you have a correction completed, it should be fully retraced, which means move back into this area, back to new all-time highs. Okay, now let's take a look also on 10-year US notes. So on 10-year US notes, clearly we have an ongoing uptrend that will probably continue, because this latest pullback over the last few years was in 3 waves, so expecting more upside, but I'm thinking about the pullback that can be already happening. Why? Because a recent break was very strong and it came out of this consolidation, out of a triangle, and we know the triangles occur prior to the final move within a higher degree trend, which means that this was a higher degree trend, so a pullback can be here. What I like about this price action is that actually market moved down and broke this trend line out of this very strong aggressive bullish channel, so we can be in a new consolidation, which can actually take us much lower if we consider that on a 4-hour chart we can count 5 waves down from the highs, and now we are moving sideways. Ideally we are here in a flat correction. Let me remove these labels. Okay, so watch out for a drop here, because if that's a flat, then that was a perfect flat, because you had a 3 waves drop to a new low for a wave B, and then as you can see here, it was a 5-wave movement for wave C. Okay, so if I'm the right track, then new weakness could already be here, which means the 10-year US notes can be headed lower into a pullback. If that's the case, the yields will rise, so then watch out maybe for lower Japanese yen. In such case, I will still pay attention to commodity pairs against Japanese yen, like CAD yen, ASEAN, because commodity currencies are very strong. So if we take a look on CAD yen, I think that this is very interesting. I'll show you why. We have seen a very nice bounce here from those lows, this at the start of the year, and then we have seen a pullback in 7 swings, very overlapping pullback, which means it has a characteristics of a correction of a just a temporary pause within uptrend. What I like about this price action is that recently we were able to push above this trend line, which means that we are probably headed higher, and maybe that's a wave 4 after these 5 subwaves, which are labeled as a wave 3. So I'm thinking about more upside on CAD yen. Even if we are starting to roll over a little bit deeper, I still think that this will be only a temporary pullback, and that sooner or later this market will resume to the upside. Okay, now let's take a look also on the funding market, which will be Bitcoin. Now Bitcoin is, as you know, is in a very strong uptrend, and it looks like that this trend will stay here. Why? Because this recovery is very strong compared to the previous decline, which was actually in 3 waves if we look the whole cycle from the all-time highs. And this move is already having a characteristics of an impulse, which means a bullish trend, because impulses are the structures where you want to participate in the market. So either that's maybe already a completed first impulse, and that we are headed south for a higher degree wave B or wave 2, or this is still only maybe wave 4 and we are going to see more upside for wave 5 soon. But in both cases, I think that this is just a temporary pullback and that market will resume its uptrend. Ideally, my primary account suggests that we are in a wave 4. Notice that this was a nice 3-wave setback, okay, with a wave B in the middle. We also found a support at the previous highs, which is very common whenever you have a 5th wave extended, like in our case. Okay, wave 5 looks like a very strong, the most stronger wave within this uptrend. So it's not a surprise that we moved only to the starting point of this wave 4, not to the end point of this wave 4. But you never know what will happen next. Of course, there's always chance for even more complex wave 4 or a complex, deeper corrective pullback. So whenever we see a sudden break to the downside, then I would pay attention to these levels. But the important thing is, as I said, that I see this as a corrective movement, and that Bitcoin will probably stay here and ready to gain even more dollars here. Okay, traders, thank you very much for your attention. Talk to you soon. Bye.